we sort of see this recent uptick more as a short-term incident, and will probably continue to trend down as the slowdown in China lowers demand for commodities.
Emily, welcome back to Dukascopy TV. It's a pleasure to receive you again.
Thank you for having me.
No problem at all. Now, we've had quite the ream of Australian data this week, but let's start with that GDP figure. Really outstripped a lot of expectations, hitting that 3% mark for the year. That said, we've got repeated concerns regarding non-mining investment, also Chinese volatility. That's a lot of data to the downside, really. What was the growth figure in there, really speaking?
So the bright spot in the data, the GDP data, was consumption, which ticked up quite nicely over the quarter, supported by the low interest rates, as well as steady trend employment and a good house price growth as well.
Also taking a peek at the trade balance figures, for example, again, another strong, robust sort of figure, but you've got a lot of market bears saying that this is really the eye of the storm for the economy. Net exports, for example, had no input really. The labour market also looking pretty unhealthy. Is this a story that's being overplayed, or are we really kind of looking at a slightly more doom and gloom outlook?
I guess we're probably a bit more optimistic about the Australian economy. I mean, looking at the employment figures, for example, they've been a bit volatile lately, which is making it difficult to get a good read. However, the trend employment looks pretty good, and that's been supporting consumption growth, as we said. Also looking at the exports, again, there's some good spots and some not so good spots. There's been a decent shift towards services, and that's continuing, which is really great, and the low Aussie dollar is helping support that as well.
Just to touch on the Aussie dollar, obviously we're sort of within this longer term downtrend, but in the short term period we have seen a real tick upwards back above 73 US cents. That's fresh 2015 high. Is this going to be giving central bank policymakers a little bit of a headache, or can we expect a resumption in that downtrend soon enough?
Yeah, so there's been a lot of volatility in markets so far in the start of 2016, and we sort of see this recent uptick more as a short-term incident, and will probably continue to trend down as the slowdown in China lowers demand for commodities, which puts downward pressure on the Aussie, as well as steady growth in the US also is putting downward pressure on the Aussie.
Lastly, then, to take a look at the RBA policy moving forwards. Markets are pricing in a cut and a half within the next year. I'm not sure where you get the half from, but it's in there somewhere. A lot of people are really tipping a May move as being likely. How does that tie in with your own forecast, particularly if we take into account this pretty solid data that we have seen this week?
So as I said, we're pretty optimistic about Australia's economy. So we're not expecting the RBA to cut rates this year. They'll probably keep on hold throughout. However, they do have a strong easing bias, and if the volatility that we've seen in markets continues, or if the transition towards service-driven growth has a bit of a hiccup, they have got room to move.
Emily, many thanks for the update.
Thanks for having me.
So that was our wrap on some of the top Australian eco data coming out for the week with Emily Dabbs from Moody's Analytics. That is all we've got time for right now, but do stay tuned for more Sydney Direct on Dukascopy TV. I'm Natalie MacDonald. Goodbye for now.